Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Welcome to another episode of The Wealth Flow. My guest today is Bronson Hill. Bronson is a managing member of Bronson Equity. He is a general partner in 2,000 multifamily units worth over $200 million. Bronson co-leads a large in-person multifamily meetup in Pasadena, California called FIBI, Pasadena Multifamily. That's FIBI. And Bronson is the host of the Mailbox Money Show, and he understands the investor mindset, having spoken individually over the phone with over 1,500 investors and having raised over $35 million in real estate and his ATM machine fund deal. Bronson is the author of How to Use Inflation to Your Advantage and is a regular contributor on YouTube and his blog. Bronson leads an exclusive mastermind for affluent passive investors, providing unmatched investment opportunities within a growth-oriented community. And he also just released a new book called Fire Yourself. All right, Bronson, welcome to the show.
Thanks, man. Really excited to be here. I love talking about real estate and I love what you're doing. And I feel like there's a lot to talk about these days with interest rates being high and everybody's not quite sure what to do with their money and inflation is higher than what they say and all kinds of stuff. So
exactly. It's a wild time to be in this business for sure. And maybe if we could start, Bronson, with really your story, where you grew up and what eventually led you to real estate.
So I actually just released a book this week, full-length book called Fire Yourself. It's behind me here. So that just is available on Amazon now. But I tell my story. I basically started doing medical device sales. I would wear scrubs and I would go into surgery and I would help physicians, heart surgeons with their surgical equipment. And I enjoyed it. I was getting paid really well. I worked full time and I was making over $200,000 a year. And it was great. The only problem was I didn't like that I didn't have control over my time. And we were talking about this. It's hard to travel when you have, a regular job and it's just maybe you get a couple weeks off a year, maybe you can take them, maybe you can't, and it's challenging. So I wanted to have more flexibility. And so I started doing, real estate. And like a lot of people, I started with single family and a lot of people think financial freedom really comes through single family. And for a few it does, but for most it really doesn't. It just takes a very long time. It's very hard to scale. These days, it's hard to find anything positive cash flow. And so I had, a small single family portfolio, wasn't really making much money with it, but I was like, oh, someday I'm going to make a lot of money. And then I have, there's this saying, when the student is ready, the teacher appears. So for me, my teacher was a relative of mine that I hadn't seen in years, a cousin I just hadn't seen in years. And he was a real estate guy. And I told him my plan to get 30 houses, single family houses. And he says, that sounds like a lot of work. Why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And so he taught me about syndication, about raising money from other people. And so I just started to meet up in LA, and over time found my first investor pretty quickly. And then I just found some partners, and within, 2-3 years, I was able to, raise over $25 million and quit my job. And now I just get to do this full time and love it. So I love being able to create resources and also create value within real estate, as well as some alternatives such as ATM machines, car washes, and oil and gas deals.
Okay, that's pretty amazing. So your portfolio, you said at the time before kind of switching over into multifamily, was how many single families?
I had 4 single families.
Okay. Was that in kind of the Pasadena area, or was that throughout the U.S.?
That's throughout the U.S. I'd lived in Montana for a couple of years. So I had a house there when I left that I had held on to. And then I started buying houses with a relative in the greater Cleveland area. And some of these houses were really cheap, but there's a reason why they're really cheap.
Right.
The tenant base wasn't the best tenant base, and the numbers, it looked great on paper, but when you actually came to collecting rent or not doing repairs or whatever, it was like, there was where a lot of your profits went.
Sure.
And so, we did okay on them. But again, when you're doing low cost housing in Cleveland, it's just not scalable. And that's what I talk a lot about in my book is that, if you, whatever strategy you have, if you can't 10x what you're doing, meaning you can't go from 2 rental houses to 20 houses without it becoming a job for you, then you're not really doing something passive. And that's why people that think that single family or trading stocks or doing an online business, or these things are not passive investments, right? There's things you actually can invest in, deals where they become passive, where you just simply, you do the work on the front end where you're vetting the deal, you're vetting the team, and then you just receive cash flow either monthly or quarterly over time. And so that's where that mailbox money concept comes from, right?
Yeah, for sure. So tell me, I guess, about your first multifamily. How did you get into it? Were you a limited partner on it, or were you part of the GP team, or what did that look like?
Yeah. So what it looked like, it's. I think I've always picked things that are like kind of hard to get into. When I was in medical sales, they said, well, you need medical device sales experience to get in medical device sales. But how do you get medical device sales experience unless you've been in medical device sales? It was kind of like a catch-22.
Right.
So it felt like that with investing as well. I was like, well, how do you get to be a multifamily operator when you haven't been a multifamily operator? Like, what's that look like?
Yeah.
And so, I found there's, a couple of different ways. Usually the people kind of go out trying to raise money, or they'll find deals. And so I really started trying to do both. I started a meetup here, like I mentioned, in LA and Pasadena, and we had 60 people at the first meeting. I'd partnered with somebody, so they had kind of a crowd with them. And somebody came up to me that I'd never met and said, "Hey, I do one of your deals, Bronson." And I was like, "Are you talking to me?" I was kind of shocked that like you want to invest with me. But so then I got coffee with him, and I showed him like a sample deal. This is what a deal would look like if I had a deal. And he said, "Yeah, I'd probably put like 100,000 or something like that." So then I got together with another guy that I met at that same meeting who had a deal, who was looking for money, and I just connected the two. So it was becoming a connector between money and deals. So that was my first deal. So that was 225 units in Amarillo, Texas. The deal did okay in the beginning, then it turned out really well. It was like a 26% annualized per year, so it turned out well in the end. But that's how I got my first deal. And I think the hardest in this business when you're doing real estate or doing larger deals is just getting that first deal done. Once you get your first deal done, it really does kind of put you in the thing that you're not just a tire kicker, you're actually somebody who's doing deals. And so that was a big deal. And then within about 6 months after that, I did a bunch of conferences and learning and networking, whatever. And I found a partner who had a big brand, but they were just having trouble raising money. So they teach people how to do their own deals. But I said, well, how's it going? You got this huge audience. And, what if, I took calls and we created content and we did all this stuff. So we were able to raise, about 6 months after I'd started there, we were able to raise about $15 million over the next 18 months. And so that was just amazing. I had 1,000 one-on-one phone calls with high net worth investors. And so it just gave me a ton of experience, right? I mean, just having all these calls and figuring out, why are people interested in this? What are they looking for? What are the things? And now I've actually had over 1,500 calls so not with brokers, but actually individual high net worth investors. So that's what's from my bio there. And so, after having those calls, you learn a lot about what people really are looking for, why they think the stock market's not good for them. And a lot of people are looking for cash flow, especially these days, are really looking for cash flow. And it's hard to find, but there are deals that are out there that really offer that.
Yeah, that's a good point. You don't get quite the cash flow from stocks, but what were some of the other things that maybe you heard in some of those investor calls that maybe surprised you about what people are looking for?
Yeah. So, well, it was interesting, having that many, having 1,500 of these calls over time. A lot of times I would just try to figure out who I'm talking to pretty quickly. I'd say, well, tell me about your work experience and your investing experience. And so someone says, okay, well, I'm a teacher and I have, we asked about net worth. So they had a lower net worth and they've never done anything. Like that's a different conversation than, I had a doctor that, it was worth 5 million and he had only done stocks and bonds, right? So there's just some people have, resources and they don't know what to do with it. Other people, they've done 20 or 30 passive deals, and we're going to have a call about cap rate reversion at exit and other technical things. It's going to be a very different call. So I think one thing that just amazed me overall was just the fact that, these high net worth folks would get on a call with someone like me, right? They would just continually have these calls and try to learn about new investments. And I realized that, to be somebody who wants to grow your wealth, you've got to spend time, you've got to invest time into getting on investor lists and really trying to hear about a lot of great deals, because a lot of these deals cannot be advertised. They really don't advertise, or they can't. There's a limited amount of advertising they do. And good
Right.
operators typically don't advertise their deals because they have a lot of people that want to get in their deals. So it's important, I think, as an investor to just really be interested in learning about new deals. I think another factor that was really interesting is just the desire to reduce or eliminate taxes was really important. A lot of people are making a lot of money, and particularly with what they're invested in, they're trying to figure out how do I reduce my taxes? And when I was able to actually in my job go from over 25% tax rate down to basically about 1%, that was pretty amazing, right? And so when you can save, sometimes you can make a lot more money just simply by paying less in taxes, which is pretty incredible.
Yeah, for sure. Maybe if we could talk a little bit about that and some of the advantages and, who it applies to as far as some of the depreciation and different tax advantages.
Again, I'm not a CPA. I don't give anybody any specific tax advice. To give that disclaimer, but there are ways that you can potentially reduce your taxes even to zero. I've got a chapter in my book, Fire Yourself, that just came out about this, where if you have, there's almost two buckets here, right? One bucket is your ordinary income. And the other bucket over here is your investments. There's investments that allow you on this side with your investments to reduce the taxable income. So for example, if you had a house that was a rental and you sold it and you had $100,000 or $200,000 gain, if you had other losses like depreciation from a multifamily syndication, or we do ATM deals or things like this, you could use that depreciation and apply it against other gains, which is great. So it kind of helps out over here. Now against the ordinary income side, it's a little tougher. There is something called the real estate professional status. So if somebody is a full-time real estate, could be an agent, could be an investor, or could be somebody who's involved in deals, or it could be someone's spouse. So sometimes we'll see this with physician who makes $500,000 a year and their spouse is a minimum of 15 hours a week. It's got to be your main thing. There's got to be kind of hours documented. But we've seen people save like hundreds of thousands or millions of dollars. I actually had two brothers that had a medical practice in California and sold it, and their tax bill was about $2.4 million, and they got it down to $125K. So, there's ways you can do this. Again, it's great to share examples. It's great to share stories. There are actually tax strategy groups that are CPAs that do this for people. And that's, I actually, watched I watched a guy, his wife was a Fortune 1000 CEO, and he was working in the medical field. And this advisor told him, hey, you'd actually be able to keep more money if you quit your medical management job. And and he was making like $200K or more a year. And him and his wife were just floored. Like, wow, if I quit, I would actually keep more money than actually going to work. And so the government creates these incentives. We don't write the tax code. We just go within. Part of it is when you create affordable housing, typically the private world does it much better than the government. The government, when they create housing, it's government projects and other things that nobody wants to live in, right? But if people do it privately, so it's a way you kind of align your interests with what the government wants, and they really incentivize you to do that. So I'm all about, trying to pay, less in taxes so that you can be able to use that money to do other things.
Yeah. That's great. And some good examples there for sure. And you made a good point with, selling a property. I mean, oftentimes if somebody is actively investing and that's what they're doing year in and year out, there's going to be times when, the property sells. But as long as you're buying something else within that same calendar year and getting the depreciation on it, it will take away your capital gains tax. So, or at least reduce it. So.
Yeah, there's some debate around, with capital gains versus just general income. And again, talk to a tax person. They can kind of help you with that. I felt the more kind of losses you have just kind of set up for you that you can use that against various gains. But it does, you just got to make sure it fits your deal, and you're working with a tax person on that.
Yeah, for sure, for sure. And what about so you did your first multifamily that was 200 and something units, and then kind of where are you guys buying, and what does that portfolio look like from a geography standpoint? Where all are you investing?
Yeah, so we've mostly in Jacksonville, Florida. We've got about 12 or 1,500 units in Jacksonville. We've got some in Atlanta. We've got some in Huntsville, Alabama. So we've got kind of a variety of locations. We've liked those markets because of the population growth, job growth, and income growth. Multifamily, in my opinion, has changed a bit just because of the interest rates. It's gotten, anything bought in the last couple of years has been more challenging, any value add deals. And so that's, caused us to look at kind of different types of deals. We're looking at a lot more like loan assumption type deals now, where we're assuming a loan, a long-term, 7 or 8 years left on a 3% or 3.5% loan. Some of those situations are out there because then you don't have to deal with the volatility of interest rates. And so, but in general, multifamily, there's, 3 to 7 million apartment units or housing units short in the US. So we know there's going to be much more demand for it. It's just right now, I think it's not an asset issue but there's a bit of a debt issue just with getting the right debt for properties. Yeah. Because, if somebody was paying 3% interest and now we're at 8% or higher, that makes it much harder. It's much less affordable for new buyers to come in. And so it's just been interesting to watch, and, we're navigating how we navigate it. And we believe the asset will continue to recover.
Yeah. Are you starting to see any kind of, closing of the big delta between sort of people's ask price and where the deal pencils out, or is that not quite there yet?
Yeah, we're seeing pricing come down quite a bit, which is very positive, and it's interesting. I think we're seeing some deals. We've had one deal that's had a capital call situation, and I remember one investor I talked to. He says he was in 5 other capital calls. Mm-hmm. So there's some challenge out there in the market. I think a lot of people are not talking about it. I think it is important to talk about, but I think for a lot of investors, what will happen is we'll say, "Oh, multifamily. This is bad. This is happening." And then they'll just say, "Oh, multifamily must be bad." But in reality, it's that quote that Warren Buffett said, "Be fearful when others are greedy, and be greedy when others are fearful." And I don't think being afraid or terrified or being super greedy is really, either was really good. But I think the point is when people are like multifamily, honestly, has gone from a very in favor asset to being kind of an out of favor asset. And so I think it's actually a really good time to start looking and being open to invest right now, because I honestly think the risks are way lower right now than they were 2 years ago when people didn't see them. And so it feels counterintuitive. It's kind of a contrarian approach. But I think for a lot of people, I just think it's important to look at that.
Yeah, I'd say so, and that's neat. I like the markets as well that you're involved in. Love Huntsville, Alabama. It's a cool little place. They're downtown area, and there's just been a lot of development and stuff for that area.
They call it Rocket Town, right? It's all the development of
that's
all
right.
The NASA rocket stuff. So yeah,
exactly. Yep. So from there, you mentioned a couple different asset classes beyond multifamily. You want to talk maybe a little bit about that? Is this something that you've sort of pivoted to, or has this been something that you've kind of invested along the way with, whether it be oil and gas, car washes you mentioned?
Yeah. So a little bit of both. We, a few years ago, I got into ATM machine investing, just because I had a friend do it and swore by it and said it was great. And then I was kind of like, I thought, okay, I'll try it. And then I'm like, wow, I really love this. It's been the most consistent, monthly cash flow. It's, these guys that we're working with haven't missed a payment in over 11 years since the fund started. And so now we've raised about $15 million for that. It's literally become my favorite cash flow investment. And these days in real estate or in anything, it's hard to find something that will quickly cash flow. It's all based on performance, based on market thing, based on a lot of things. Or if there is cash flow, it's not it's not that high. It might be 5, 6, 7% maybe. But with this deal, it's just a much higher cash flow deal. And so I think, cash flow, if you look at appreciation versus cash flow, I ask that question a lot on investor calls. Like, what do you find more important personally, cash flow or appreciation? Like, oh, mix, or I haven't really thought about it, whatever. Well, I'm just so much more a fan of cash flow, because cash flow is what allows you to be able to leave a job. It's what allows you to be able to cover living expenses. A lot of money someday doesn't really mean a whole lot today. Now, I think it's good to have some of both, but I can say, okay, well, my cash flow from this is 10 or 15K a month or whatever. Like I can say, okay, this is coming in with this amount. I know that's kind of solid, that it's going to be there. And so I think that's something for a lot of people that we undervalue. But so we've branched out. We've been doing the ATM machines. We've also gotten into car washes, which is basically a private equity roll-up strategy where it basically just means if you have one car wash, or one gas station or one dental practice, it'll sell for, let's just say 8 to 10 times earnings. But if you have 50 car washes, you might be able to sell it for 15 to 25 times earnings, right? So it could be, 2 or more times the multiple, just simply for having more. And like, well, why is that? It's because private equity is the one who wants to buy. They don't want to buy 1 or 5. They want to buy 50. And there's a scalability there. And so, and that's kind of a cool, because you get some cash flow typically along the way, and then there's some upside when the deal sells. But so there's different things that are out there like that. We've also done some oil and gas. I started with that as an investor as well, and then just found I really liked it. We've got some stuff in the VC kind of space as well. So we've done a variety of things, and I think again, it just comes back to what is the market saying? If I only do one asset, if I'm only doing multifamily, well, I've got to be multifamily all the time. If I can move between different assets and do different assets at different times when they make sense for me, or they make sense just from a valuation standpoint, it gives you a lot more. It's like having more tools in your tool belt and not just being stuck on one thing, right? So we always typically will invest in a deal. It's for tax reduction, it's for cash flow, it's for appreciation, it's a retirement account, whatever it is. And so you got to think, well, what is the asset and what is the goal? And again, in my book, Fire Yourself, I talk about this. I talk about how do you analyze any asset? Like, what are the things that you do, the steps that you take so that you can be able to analyze any kind of deal or any operator? And it's similar principles. It just looks different from multifamily to ATMs or different things, but it's the same principles.
Yeah, for sure. Maybe we could talk a little bit about your book and just your personal journey from, selling medical devices and, what did you, obviously multifamily played a role, but, what point were you able to replace your income? Maybe tell us a little bit about that journey and some of the things you learned along the way.
Yeah. So we were talking about this a little bit before the show. I left my job about 2.5 years ago. And I haven't had any regrets. I'm really glad. And it was hard for me to leave because I think after we raised the first 15 million, I was ready to okay, I want to try to get out of this, I want to leave. And then COVID happened. And so I held on for about another 1.5 years. And looking back, it was probably a good decision to hold on. But there's really nobody to really tell you, hey, here's when you should leave your job, whatever. But I had this group of entrepreneurs around me. Most of my friends and family are not entrepreneurs, right? So they just are in a job, and my family was like, why would you ever leave your $200K a year job? Like, no, right. It became the golden handcuffs, right? And so I was in this entrepreneurs group. There were 6 of us. We met every month for about 4 hours. And after about a year in this, I just said, hey, this is where I'm at. I want to leave my job, but I'm kind of scared. I don't want to leave too early, or am I crazy? Or, and they basically, I shared the business, like what I was doing with them and how I was making money. And they, they're all like, yeah, every single one of them was like, you should leave your job pretty much as soon as possible. And, it sounds like a great business, but he's like, if it doesn't work, they said, if it doesn't work, you could always go back to medical sales. And so I didn't realize yeah, if it doesn't work, I could always go back to medical sales, right? So it kind of became this but I wanted to have, for me, and I talk about this in the book as well, there's different forms of financial freedom. So the first level is your rat race number. So that's when you look at your living expenses. And for me, it was 60, 70,000 a year. It wasn't a lot of, but it was like, this is what I need to live on. I live, pretty simply. Maybe people, be much more, but that's the first number of just what do I need to kind of have, be able to live my life and travel and do what I want to do. And then, to replace my income. So again, the big difference between 60, 70K and 200K. Yeah. So I wasn't going to be able to replace my income initially, but I said, as long as I can cover this, and as long as I keep doing deals, and maybe there's little fees or acquisition fees or just, things I get through doing deals, then I'll just keep working at that. And so once I felt like once I was able to cover that, which, if it's, 70K a year, that's like say 6K a month, less than 6K a month. And so it's not a lot of money. And then being a real estate professional, I realized I didn't need to make 200K. If I made, about 150, that would be the same as 200K because of the savings in taxes, right? Because I was paying the 25% taxes, right? So there are things that when I kind of started looking at it, I was like, well, this is interesting. And I was like, well, I knew if I didn't make this move at some point, I'd regret it, when I'm older. I'd be like, I wish I would have done that, right? I wish I would have taken the risk. And so I think that's the hardest thing, though, is when it's uncertain to be willing to do it. And some people, if you have 5 kids and, you have a stay-at-home spouse and, it's just not maybe the timing to do it. But if you can, it's like, man, I'm so grateful that I took the chance and it's worked out well. I mean, it hasn't been perfect, but it's been a lot of growth. We're definitely produced a lot of growth in me for sure.
Yeah.
It's been fun.
What did you do as far as insurance? I've got several friends in some of my masterminds, and then, that's always seems to be the big thing. Okay, what are you doing with health insurance? That kind of thing. So were you able to find some good resolutions?
I did. Yeah. I think everybody's situation is different. I think if you have a spouse or you have a child that has some major health issues, I think it's definitely a bigger consideration. What I did is I found a plan that's, for my daughter and I'm a single dad. So, it was like $500-600 a month. So it wasn't that expensive. And it's, it's a basic plan. We go and get, treatment. I get like a, doctor's appointments and dental and whatever, but it's nothing fancy. And if there is if I need a surgery or she needs a surgery, it's probably like $5,000 out of pocket or something. So, but I think I just kind of say is, well, I'm going to spend less up front, but I'll just be willing to kind of, there's kind of a max out of pocket thing. And insurance is great because it helps to reduce risk, that if somebody has like a brain tumor and it's like $2 million, then you'll be able to cover that. But in a lot of ways, I just, I've had different types of insurance. I've had really, when I got a massage every week, I'd be able to go in for a half hour and get a massage every week. It's pretty amazing.
Wow.
But I don't have that kind of insurance now. So, it's $500-600 a month, and I'm able to kind of, get it works for us. And I think if you're generally healthy, but, I think it depends on your situation. If you feel like you're going to just have some chronic thing or use it all the time. But I know people that work full time and they're still paying, $2,000 or $2,500 a month for their family just for the insurance, not even including the co-pays or the deductibles or other things as well. So I'm more on hey, I'm going to be kind of more of a catastrophic kind of plan. And maybe I'll put another $5,000 aside for the year just in case. But, last few years, I haven't really needed it. So save that money for a rainy day for the future. Yeah,
for sure. What about your team, Bronson? What does your team look like, as far as the investments, or who are you? Are you helping mainly to raise capital, or are you working with same operators each time that you raise for a deal, or what does that look like for you?
Well, it's looked differently. I mean, for some of the multifamily stuff, I've been involved, but you have partners that have been more on the operations side. And then I've kind of shifted with some of these alternatives. I have a fund for each asset. So it's like a fund of funds, or I'm like a fund manager for our ATM fund. So we partner with the 4th largest operator of ATM machines in the country, or for our oil and gas deal. I've got a great partner in that who's super experienced. So I don't have to be going and managing stuff that I don't know how to do. I basically will really rely on the strength of partners and their performance and their character. But so I think it really is a team sport when it comes to operating larger deals. I thought with single family, I mean, a lot of it's kind of you on your own. You may have a real estate agent, you've got a construction person, but you're kind of like, you can be managing a lot of stuff yourself. Even with a property manager, you're kind of, it still feels like it's kind of just you and you're kind of making it happen. But with a large multifamily deal, and then you'll typically have multiple partners, maybe one person found the deal, one person's a great operator and they'll operate the deal. Another one, or a couple people will help raise money, and, maybe everybody raises money. And so you'll have kind of this team approach, and it allows you to do much more, but it also kind of takes the pressure off of you having to do everything. So my focus really has been trying to be in the educational side. I love communicating with people on how to grow their wealth without taking more of their time. And so we've created a whole platform around that. And so that's why I've been blessed to have all these calls with investors. And then a lot of these folks end up investing over time. So a lot of it comes from education and really creating the value for people. And then people choose to invest in the deals that we will bring.
Yeah. And over the course of the time since you've really started doing some of these larger deals, what are some of the biggest lessons maybe that you've learned along the way, or maybe surprises?
That's a good question. I mean, I think teamwork, like I mentioned, is one. I think partnerships are really important, and with partnerships, you can't always tell right away. I mean, I think the thing is, you think everything looks great in the beginning, everything looks great on paper. You really get to know people when you do deals with them, and there are some partners that are like, yeah, we'll do many more deals with, and there's some of like, you know what, I don't think we're a good fit just based on our values. And that's when I talk with passive investors as well, I always share our values. We try to approach things from a very conservative approach. We like a long-term relationship with our investors. So we're, gearing up our entire communication, everything we're doing to try to, in 5 years, somebody has a great experience from the investment, the performance, the communication. And then we try to be very transparent in our communication. And you think those are pretty simple values, but a lot of people, when they raise money or they work with investors, they just want to raise the money. They don't want to actually have any relationship with the investors. They just want to kind of do the deal and not really. And so, I think it's important when you are in the business and you're operating that you share what your values are. I think it's important as an investor, a passive investor, that you share what your values are and you listen to what, they say. You see what's on the website and you just see, is it consistent? And talk to other investors that have been around. How do they speak of that person? How do they speak about their deals? And, I think when someone, when you ask, hey, what's something that didn't go right in a deal, and somebody's like, oh, just kind of doesn't have anything to say, or they kind of, oh, everything's kind of gone fine, whatever. It's like, well, maybe they're just inexperienced, or maybe they're not being honest with you. So I think that, this whole process, both as a passive investor as well as an operator, it's just about learning. It's about trying to continue to learn and grow. And obviously money is incredibly valuable and people work very hard for it, but none of us are ever going to do it perfectly. And so we just need to really have a growth mindset that we're all going to keep growing. And, I've made a lot of money. I've at times lost a lot of money. I have a title in my book. I have this story where I lost $70,000 in an options trading strategy in one day, when that was about a third of my net worth at the time. And so that was a bad day, right?
Right.
But for me, it became a $70,000 education that, you know what, this is not my best seat. I'm not the options trading guy, right? And I'm okay with that. I have other things, I have other skills that I'm doing. So I think those things, I've watched a friend actually who also invests in the Cleveland area. And he just kind of totally got destroyed. I mean, he just did a bunch of stuff wrong and lost a whole bunch of money. And he looked at it like a personal failure, like he was just not okay, whatever. And I think the challenge with that is, unless you look at everything as being growth, like a friend of mine says that when you go through life, it's either a success or it's a seminar. Right. So it's either going to succeed and you're going to be successful, or you're going to learn a heck of a lot.
That's
but
right.
If you can make it, if you can just remember that, it's going to be a success or it's going to be a seminar. It's not going to be failure. Failure is just learning. It's just learning and growing. And I think that's where the mindset piece of this is so important.
Yeah, that's funny. I just yesterday had a conversation with my youngest daughter, and she had over the weekend a big deal. She's a freshman in college, and so they had some deal where they were selling a bunch of. She had hats and different things, and she had spent all the prior week, leading up to this, and was really looking forward to it. And I asked her last night, how did it go? And she said, it was terrible, Dad. I didn't sell but just a few things. And she said, I only made $60. I said, well, how much did you spend? And she said, well, we spent like 200 and something dollars. And so I was like, wow. Well, that's a lesson right there. And it's a fairly cheap one, $40. Yeah, I mean, not cheap for her, but that's one way to look at it, as all these challenges that we have. Nothing goes perfect, but there's always a lesson for you.
Yeah, for sure. And that's just life, right? Life is about learning and lessons and growth. And I think that when we stop learning, we kind of start dying. So I think it's just important to keep learning.
Yeah, for sure. For sure. Tell me a little bit about the meetup that you've created. How have you promoted that, and how many members are there, and what does it look like? What type of, is it mainly educational?
Yeah, so we have so I love events. I mean, I love meetups. I love conferences. I think you just get such a high quality. Depending on the conference or the meetup, you get a lot of amazing people in a room talking about real estate or investing. and it's just awesome. Like what is available, like things open up, deals, and just like I mentioned, I was there, an investor was there, was looking for a deal, and then I introduced him to somebody who had a deal, and it's just like being a part of that is that's how people get paid, right? Is being a connector.
Yeah.
And so our meetup, actually, we changed the name because we wanted to, the one we had with Phoebe was a not-for-profit. And so we changed it to be a for-profit. So we actually can do more educational courses. We have a mentorship program, and it's called ITI, Investor to Investor. So it's itieducation.org is the website. But we have it's in Glendale, California now, so right around the corner from Pasadena. And it's first Wednesday of the month. We had about 65 people there last month, usually between 60 and 70 people. And it's been great. We'll have great guests. We'll have really great, syndicators, people that have gotten started, have left a job, or getting ready to leave a job, and just, that are kind of our speakers. We'll do a fireside chat. And, we just find there's a lot of value, getting together. And then when you can create those relationships as well, we have an inner circle there as well. So we really try to push on each other, really say, hey, what's it going to take to get to that next level? What's it going to take for you? What's it going to take for me? And then when you say it, you're accountable, right? And then you're accountable to actually do those things, or call those brokers, or get a hold of those investors, or, go to the market, or whatever you're going to do, go to that area. So I think, again, there's just so much collaboration. It was told to me once that, that the two most important things in investing are networking and education. And I think that's true, that basically you getting around the right people. There's also saying you're the average of the 5 people you spend the most time with. So if you want to change your wealth, your health, your spirituality, any area of your life, you just got to get around people that are at the next level in those areas. And when you do that, it really begins to change you. So networking, and then the educational piece is reading books. So I read, a ton of books. I'm at 75 books for the year. My goal is over 80. So I think I'm on my way to get there. But, just doing things that can really create the networking and education, and meetups and conferences do both.
Yeah. Okay. Sounds good. And so what are you seeing as far as the market goes? Maybe let's talk. I mean, it's a challenging time, and we've alluded to this a little bit, but what are some of the challenges that you're seeing out there, and where do you think things are going? I know none of us have a crystal ball, but it's always good to take a poll.
Yeah. It's, my crystal ball is broken. I think for a while I was of the opinion that I think rates were going to drop down. They were going to keep them high for a little bit and drop them down. I mean, right now we're at, what is it? The Fed funds rate has come up so quickly. I think they're going to try to keep them elevated, at least where they are, for a while. I mean, if you look historically, we're about at average, maybe 7, 8, it's kind of average historically over the last 50 years. So it's not like we're necessarily high. It's very challenging for people that have had, especially in the commercial space, that have, whether it's multifamily or other things, that have bridge debt or have shorter term debt, because that debt has to roll over. And so that creates a lot of pain, because the valuation is just not there. And we've seen that. We've seen deals that, we have one deal that's a $60 million purchase in Jacksonville. We renovated about 65, 70% of the units, and the valuation at 80% occupied was $36 million. And so you're like, how is that even possible, right? How could you do all this work, increase rents by 25%, and the value come down so significantly, right? That's a big deal. And so, so some of that stuff's external. I think I'm seeing continually the value of fixed rate debt, of really having longer term fixed rate debt. It's just, you just basically take a lot of the variability out of it, and that, hey, as long as this thing cash flows, you can hold it. But I think that, again, we're coming into a time where there are some real deals starting to come available now. And I think it's just, investors, it's getting them excited about it, right? Because, if investors have been in it, they're feeling some pain, and they're feeling it. They're like, hey, doesn't feel good. And even the wealth effect of, hey, I had money here, or I had this stuff going, I'm not really feeling that way as much anymore. And it's overall, I think the economy overall in the US is doing okay. It's just in certain segments, particularly in multifamily, there's definitely been some changes. And so I think people have to definitely pay attention. So we've loved, though, kind of the business side, like I mentioned, things that cash flow and things that are not correlated to real estate for that reason. If you have 95% of your portfolio in real estate, maybe some uncorrelated assets would be good, right? Because then, whatever could happen, and you've still got other sources of income elsewhere. So, but I think it's, important to have an open mind, to keep looking. And I would much rather be in deals than be sitting in cash. I think inflation is much higher than the official reported number.
I agree.
And so I think being in deals and using inflation to your advantage is a good thing.
How about your deal in Jacksonville, maybe specifically, or maybe any of them? Maybe it's not just Jacksonville, but have you seen anything with insurance rates? I know a lot of challenges have been posed, in certain areas, but again, it's very area specific.
Yeah, we're seeing, one challenge, Ken McElroy is a friend of mine, and he's talked a lot about this too, where you have, insurance costs in Florida are up 200 to 300%. Labor costs are up, material costs are up, staff, everything is costing more. Rents are up a little. They're not really up as much, last year or last 6 months, they've kind of more stabilized in most markets. And then of course the cost of debt is up as well. So there are definitely challenges, the higher your expenses go, and, it gets more challenging to manage a property that will actually cash flow. So I think that is a big deal. But again, these situations happen, and then they can also set up for a real amazing time to get in to invest, right?
Right.
So that's one challenge too, is that we look, we say, oh, there's challenge in certain deals, which is true, but they can also lead to great opportunities. But yeah, insurance is something I think all over. I think in Florida specifically, it's just very limited, very few. Some properties can't even get insurance right now. This is single family. This is multifamily. This is because they've had just the last several years, they've had just a couple pretty major hurricanes each year. And so there's just tons of losses. And even if you're in a place like Jacksonville, where we really haven't been hit by hurricanes except very mildly, right. Insurance is super high. And so insurance is all about managing risk. And when groups, if nobody wants to take that risk, then it's like, we don't want to be in Florida. It's like the story of it. Even if you're in a different part of Florida or in a different state around, like even in Georgia or wherever, people still have some concerns.
Yeah. And what do you see in the future for yourself, Bronson, and for your company? What do you think the next 5 years are going to look like?
That's a good question. You can ask me in 5 years, and I'll let you know if I got there. No, I think it's continuing to. What I really have found is, if I can be a person who adds value in this space, if I can be someone who helps educate and helps grow, and by sharing my story about how I got started and why I love real estate or why I love passive investing, I think it can help a lot of people. I just think, for a few years on the side while I was doing medical sales, I was a investment advisor. I was a registered investment advisor. I'm not anymore, but I wasn't. I just saw a lot of people got pushed into stocks and bonds and pushed into things that, they don't always treat people well. That they're not always looking out for an investor's best interest, right? There's a big misalignment. There's a whole chapter in my book about watch out for Wall Street, right? So I think what we do as syndicators, what we do, what you do, what I do, to really get people out of Wall Street and into Main Street, I think is a great thing, because I think the more, the little guy just has to do stuff in Wall Street. It's like, you talk about volatility, you talk about fees and misalignment, and just there's so much that I could spend a lot of time going into talk about the specifics of why I think Wall Street is just not great for most investors. But, I do think that so anyway, the more I can do within that, hopefully write more books, release more things of value, do more deals, and just continue to live my best life and help others to live their best life. I think when someone's financially free, it really allows them to say, do I want to go to work? Do I want to keep owning this business? But a lot of times if people retire, they don't know what they're going to do. They don't know where the money's going to come from. They don't know how they're going to make it. And so having that cash flow and having, can be really, it feel really powerful, make you feel real powerful.
Yeah, for sure. Anything that we haven't covered that you want the audience to know?
I think, like I said, just, the biggest thing people can do, I spent 6 years going to meetups and learning. I had one rental house, but I didn't really do anything. And really, your life doesn't really change until you make a decision. And for me, when I made a decision that I was going to leave my job and go do real estate or retire with passive income, I said, I'm going to try to do this within 3 years. And then I did it with less than 3 years. It was like a month shy of 3 years. And so, Tony Robbins has this saying. He says, it's in your moments of decision that your destiny is shaped. And so, whatever you have the desire to do, if you go after it, typically you're never going to regret it, right? You're not going to regret taking those actions and going for the dream because, life is too short. And there's that quote, at the end of end of your life, you regret more of the things you didn't do
For sure.
rather than the things you did, right? That you didn't ask that person out. You didn't go on that trip to wherever in the world. You didn't, take the risk of leaving a safe, secure job. And so I just think being someone who's being willing to live a brave life and being willing to be courageous, that's something that I want to be that person, and I want to help other people to be that too.
Yeah, that's great. Tell me a little bit about what you do when you're not investing or writing books. You mentioned that you're a single dad, but what do you do for fun?
Well, this weekend I just did 2 Spartan races, which a Spartan race is like an obstacle course race, and so people are like, you get, you actually pay money to go in and kind of get beat up for an hour or two.
Right.
You run this course with obstacles and carry heavy things. And if you miss, you do burpees or run extra. And I've actually started doing competitively. So I finished in a national race, not professional, but in a national race, I finished 7th for my age group. So I keep kind of getting a little bit better. And that was about a 13-mile race up in San Luis Obispo. And then I love, it just helps me to be in good shape. So I just keep doing that. And it's fun to, continue to try to push my limits and push myself. So I do that a lot. I love traveling. Like I mentioned, I've been to 42 countries so far. So 41 countries.
Yeah.
And I've got a trip next week to New Zealand. So that'll be fun.
Have you been to New Zealand before this trip next week?
No, my first time.
Okay.
Have you been?
Okay. No, I have not. It's definitely one that's on my list. So excited for you. That's awesome.
Yeah, I'm posting lots of pictures. I'll put lots of pictures on social media so people can see them. Yeah.
Awesome. All right. Well, I've got just a couple more questions for you, but maybe before we go there, Bronson, if you want to let everybody know how they can find out more about you. You mentioned, if you could maybe mention your book again, and you said, I think you can order that on Amazon.
Yeah, it's right here. It's it's called Fire Yourself. It's, replace your working income with passive income in 3 years or less. And so it's on Amazon. It's already an Amazon, just came out like 5 days ago. It's already an Amazon bestseller for new releases. So I'm excited for that. So we've sold a bunch of it already, which is fun.
That's awesome.
Also my website, bronsonequity.com. I do have a free download there, how to use inflation to your advantage. So just some strategies that are kind of outside the box. And then, I'm on social media and different things people can reach out, but we have our investment club as well if people are interested in kind of hearing about our unique deals that are out there too.
Yeah, that's great. All right. Maybe what advice would you give somebody who is just starting out in their investment career, their wealth creation career?
Yeah, I think, the biggest thing is make a decision to take action. And a lot of times I've become more and more a belief of this, and this is, I don't know if this is something I came up with or somebody else did, but the idea of like life has an action bias, meaning if you take action, then you will get where you want to go. If someone has an incredible plan and they have just like the best plan in the world, but they never do anything, the plan doesn't help them. It doesn't help them at all, right? It's the planning is, and I'm not against planning is great, but unless you actually take the actions in the plan, unless you actually start going, I've just seen people and myself where like, I don't really know what to do. So I just go to a meetup, I go to a conference, I go whatever, and I just meet some amazing person, or I have some idea of like, I didn't even know it was a thing. I didn't know you could do ATM investing. I didn't know you could do these other things. And then these things just kind of open up. And so then you just kind of keep going, you keep taking the actions, and you keep reevaluating to really what's going to work for you, right? So I think that's a really powerful thing, is just taking the actions, and it will look different for different people, but for a lot of people that are interested in passive investing, it'll look like going to a meetup or watching webinars or getting on lists of deals and analyzing them and then choosing to invest in one. It could look like that. And so I think, again, we all have this analysis paralysis sometimes. We want everything to be perfect. And we see a lot with physicians, they're taught to just take information and use the data and then make a decision. But a lot of times you don't have all the data, right? So what do you do when you don't have the data, right?
Yeah.
Or you have some data, but there's some uncertainty there. And so I think being able to take some action and giving yourself a timeline of like, I'm going to invest within the next 60 days, and I'm going to look at as many deals as I can. I'm going to choose one, right? Or choose two. And so I think just having a plan and then following it and taking the actions.
Yeah, I think that's great advice. Okay, you'll like this one. Just this is a question I ask every guest, and that is just a book recommendation. You mentioned you've read I don't know how many, 70 this year.
75. Yeah.
75. Wow.
Yeah. There's a lot of good books out there. My favorite book that I recommend a lot is called The Gifts of Imperfection. It's a book by an author named Brené Brown. It's more in the personal development world. Just talking about, kind of overcoming shame and really owning your story. I think that it's just been super powerful. There's another book that's more, I think, relevant to business. Actually, I think even the personal development stuff is relevant to business. But this other one, it's written by an former FBI hostage negotiator called Never Split the Difference. And that's one I try to read every year. It's so good. I mean, it just gets into different strategies. And when you're communicating with people, how do you communicate in a way that's win-win? And how do you really listen to people? And how do you really help how do you create a situation where everybody gets what they want? And I think that's possible. And it's just some of the things, like how we word things, instead of asking, well, why would you do that? Or why would you do this? You can say, well, what are you hoping to accomplish by this? Or if somebody asks you something unreasonable, you say, well, how do you want me to do that? And it's like, then you're kind of enlisting them in the problem that you have, or they're, enlisting them, helping, how do you want me to do that? I don't have this. I don't have the money. What do you want me to do? How do you want me to do that? And so, it gives some cool strategies for sure.
Yeah. I'll have to listen to that one again. I mainly do the Audible, but, that's Chris Voss, right? Never Split the Difference.
Yeah. I got to have lunch with him once at a conference. It was pretty fun. Yeah, he's quite a guy.
Yeah, that's cool. That's cool. All right. Well, Bronson, I have enjoyed having you on the Wealth Flow. I think you've brought a ton of value for our listeners, and just loved hearing about your story. And I'll have to get your book as well. So, Thanks. We were talking a little bit ahead of the show here. I'm trying to do the same thing you've done. So, appreciate that.
Awesome. Thanks, Keith. This is a lot of fun. I appreciate you having me, man.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.